AT&T disappoints with the Time Warner deal, Apple faces supply issues, and GM over-delivers. This time on the Morningstar Weekly Wrap. AT&T announced a more than $85 billion deal to acquire Time Warner over the weekend, but our analyst Mike Hodel is skeptical of the deal's strategic rationale and price.
Well, we think AT&T is buying a great asset in Time Warner. We have a wide moat rating on Time Warner, and we think the business is really well positioned within the media market to continue creating premium content. With that said, we don't see a lot of synergies between AT&T's core wireless and fixed line phone business and the media business that they're acquiring with Time Warner. And as a result, we don't think there's a lot of ability to create value by bringing these two companies together. So we evaluated the deal primarily on the basis of what we think Time Warner is worth on a standalone basis. So with our view that AT&T is paying a little bit too much for Time Warner and that there isn't a lot of value to be created by putting the two companies together, we lowered our fair value on AT&T from $36 a share to $35, which in our view means the stock is roughly fairly valued today, even after the deal's announcement.
Brian Colello thinks that disappointing guidance from Apple this quarter reflected tight supply of the iPhone 7 Plus.
The bigger news is always the first quarter forecast for the December quarter in the holiday season, and there the big story is that the iPhone 7 Plus is a bit supply constrained, that demand is outstripping supply and they're not going to be able to satisfy all orders. And so the revenue guidance for Q1 was $76 to $78 billion. That's a little bit higher than what it was a year ago, so only slight growth. The bigger disappointment we think for Q1 coming up is the gross margin guidance, which is about 38%. They reached as high as 40%, and even if you adjust it back, kind of 39% is the baseline. And again, I think that's the issue, that they're going to sell fewer iPhone 7 Pluses, which are the higher priced phones. The good news, or the silver lining, if any, on the 7 Plus is that that might bode well for the March quarter and a little bit of a bounce back. Ultimately, we're not expecting tremendous growth from Apple, so even the Q1 forecast, we're not expecting exponential growth anymore for this company. They're hitting all of the major carriers, they've expanded into all of the regions, but we expect sales to be somewhat resilient longer term, and we still see that going on with Apple, so we're still bullish on the company long term, but again, the Q1 forecast, particularly on the gross margin line, just a little weaker than what we were thinking.
GM had a strong quarter, and Dave Whiston thinks the market's worries that the firm's earnings are as good as they're going to get are misplaced.
So GM reported yet another awesome quarter this week, blowing away consensus double-digit growth in both revenue and earnings per share. Unfortunately, the market did not reward what I saw as a really good quarter. The market, though, just seems to be much more focused on this idea of this is as good as it gets for GM, and they can't do any better. In the meantime, shareholders, though, are waiting, getting paid to wait with a really nice dividend yielding nearly 5%. They also finished the first part of their buyback program early. They're going to move on to the next $4 billion phase for a total of $9 billion in buybacks over the next 3 years, 2015 through 2017. So I did cut my fair value down to 44 from 48, mostly due to more investment being required and some slightly lower income in China. But I remain very bullish about the new GM. There's a lot more cost cutting still to get from by the management team. They're not done with their $5.5 billion in cuts, but exactly when that's all going to translate into stock price appreciation is awfully hard to say.
And in case you missed it, we just released our new ratings for 529 college savings plans, along with more information on the best ways to save for college.